Good morning, team. Happy Saturday. This is the weekend video. Okay, so we had a pretty nasty sell-off the last few days after Wednesday's Fed minutes release. The Fed is again reiterating their hawkish stance. So the market did not like that. They're going to accelerate their bond buying. The taper is going to be accelerated, and they're going to increase their hawkish stance on the rate increases. So all that combined, basically the market took a little hissy fit and kind of dumped down a little bit. The only kind of saving grace here is it wasn't a really high volume. It wasn't like one of these big bars. It's still relatively at the 50. It's technically like 30 or 40 cents below the 50, but it's kind of holding. It is lower highs. It is kind of slanting down. This low is definitely lower than this low, and then this low. So they're higher lows. So it's not a good trend, but it didn't really drastically break the 50. So there's a little good news there. Let's see what happens Monday. Monday normally, like I always say, it's a continuation of Friday. So if we have another down day on Monday, then maybe do we have turnaround Tuesday, and we get back up to the 350, this area here, and we kind of like stagnate for a little bit, build a little sideways movement until we go up again. Another thing I've been noticing also, this is could be the potential of building a reverse head and shoulders, which this is one shoulder. This is the head, and then maybe we build another, downward move here, the other shoulder, and this will be the neckline. And this reverse head and shoulder is a bullish pattern, where when you break the neckline, you normally tend to go up. So if this is the case, then we have a little bit more downsides to go. We could always, go down and test these lows again. And that wouldn't be a surprise either with the way the Fed is acting. Like they always say, don't fight the Fed. So we never know. So if we do continue higher, yeah, I'm going to keep taking a little bit more heat. But my actual long shares are working because they're on breakouts on top industry groups. That's why I always stress to concentrate on the top industry groups on long positions that are trending, because statistically, 50% of the stock's price move is determined by the industry group. So if you have a leading industry group, that's you already won 50% of the battle on the price movement. And then if you have a leading stock, as opposed to let me see here. What's working right now? Like I'm in Oxy right now. That's working really nice. This little breakout here worked. We had a 7% move. So I have Oxy right now. I'm in the I have a short put on Oxy. If you have good earnings growth, you have a leading industry group, and you have a nice trend line that it's above the 50, way above the 200, and holding the 21, that's a recipe for profit. Okay, so industry groups first, top down. Well, first market. If the market is trending, then that's a lot of wind in your back. Obviously, the market is not trending. Hence, I've been doing a lot of premium selling because the VIX right now is again above 21. I was a little bit early. I started selling premium in the 1980s and 20s. I should have waited for like 23, 24 to start selling premium, but hey, hindsight's 2020. So again, I was a little bit early. That is my ongoing common mistake I keep doing. I'm a little bit early on things. I'm a little bit early on getting in. I'm a little bit early on getting out. But that's fine. I catch this. I should have waited. I got in here. I should have waited when it was here to kind of avoid the drawdown that I'm currently having. But that's fine. Again, it's on selling premium, so I have a little bit of cushion still. And even if we go down a little further, yeah, my drawdown, it won't be realized, but my drawdown will be a little bit greater. But that's perfectly fine, because again, I have a lot of tools in my toolbox. I can continue to roll, generate more premium, ride out my time, and then wait for things to improve themselves a little bit better. and if not, just run the wheel on the stuff that I have. Um, Now that I mentioned that, I do have. I want to kind of like I did with the case study on my SQ trade. I want to do a specific educational video on my wheel strategy. When I say my wheel strategy, because I run that wheel strategy. It's not something I created or anything like that. It's a very common, well-known strategy. But I want to. I have fine-tuned it to my specific likes and comfort zone. So I'm gonna do just a specific video on educational on the wheel strategy, and I have a flow chart that I created, and I'm gonna go through examples. So I'm gonna go a little bit more in depth on a specific video, maybe sometime this week or maybe by next weekend's video. I'll do a wheel strategy a video to show you how you can generate extra income and add to your portfolio's return with a relatively passive approach to generating income in the market. Besides our breakout trades and our strategy for growth on capital appreciation moves. So market. This is what I've been showing you guys the last few days, where the week is spent. I mean, sideways. We haven't done anything. We peaked and we down. We peaked and we down. We have this gap up here that we still haven't closed, and we have this major gap up from Monday that we still haven't closed. So this needs to be closed, and then this needs to be closed. We are in the lower end, so not necessarily healthy. There's a lot of overhead resistance. So there's a lot of stuff that we have to go through. But the first level is just get this gap closed. Then we might go up to the top of the channel. We hit our head here. We hit our head here. We try to hit our head here. Here, and we didn't get it. So maybe when we hit it again, we might eventually close it and fill this gap. If we fill the gap, we might come back down again. But at least this is a nice move that we could take a lot of profits in the current portfolio. So again, there's a lot of headwind, a lot of stuff going on that if you look at it right here, it kind of works out perfectly right here, where we still have this down trend line, and this is not a healthy chart pattern. This is more conducive to continuing down. If we break this base right here, which there's a high probability that this would happen. I'm obviously hoping that we get the reversal to fill the gaps. That's how I'm positioned. But if we do go lower, then we go to a daily, and then, like I said, we might hang around this little area here. We might build this shoulder, and then eventually go higher, break the trend line, and continue higher. But we still have a lot of resistance up ahead to clear. So this year is not going to be a very long-term trading year. The first quarter has been basically sideways with big time chop. So again, if you go back to last year, we had a nice little uptrend here in January, and if you go to May, right here, we had this little chop fest right here. Then let's say here, first, second week of April, we had a nice little sustained up rally, and then we came down in May. We chopped around for a little bit to the end of May, and then we took off. Can we do the same thing here? It'll coincide with this, this head and shoulder here, which will be the next couple of weeks in April, and then go down in May, because May usually, you sell off in May. The saying goes, sell in May, go away, something like that. And then we might have a little summer rally that we eventually break the trend line, and we might get a little bit of a sustained, 1 or 2 months rally. Again, you would never know. This right here happened with the Fed helping by zero interest rates and putting a lot of liquidity in the market. This is not the case this year. This year they're saying we're going to taper, we're going to stop the bond buying, and we're going to increase interest rates. That is not good for the market. Okay, that pushes the market down, because growth stocks are not going to be able to be in sustained uptrends. So there's a lot of headwind. it doesn't feel comfortable to really go long on shares because we've been getting stopped out. But again, if you're in the right industry group, that's why the S&P is holding up a little better, because there's a lot of rotation in the spider. The spider has, the oil stocks, the energy stocks, where the Nasdaq doesn't. So the S&P holds up a little better. If you notice, it's way above the 50, holding it nicely. Again, it went down, but it's holding a lot better than its counterpart, the Nasdaq. Why? Because the Nasdaq has growth stocks, and the SPY has the energy stocks that they tend to have rotational pull to them, and then we have a little bit more of a balanced approach here. So take it for what it's worth. I went through my scans. I don't think we're going to be going much higher on Monday. Maybe we have a little counter rally on Tuesday. Who knows? But you still got to put the work in. And I still went through my scans. So this is what I have for next week if potential setups. ICL 1223. ICL 1223. I want to take out this high right here. Nice little base. I think I put it in for last week. It didn't take it out, so I'm still at it. This is a nice little constructive pattern here, holding the 21. Great numbers. Number one leading industry group. ICL. ARCP. ARCP 1623. Is it ARLP? Sorry. ARLP 1623. I want to take out this high right here. Nice little shelf, holding the 21, above the 50. Good numbers. Top industry group. I like this. ARLP. CEIX. 4005. 4005. I want the 40 to be taken out. It's a little bit loose, but the 21 is holding real nice. So maybe if we break the 40, top industry group, good growth last quarter. Good numbers, great numbers for the next year. So maybe this has a little bit pickup here into earnings season. We might, make a run to 50. CEIX. HCC. HCC 3853. 3853. Right here. They got this little downward little channel here. It's holding the 50 real nice. Didn't even get to it. We might make a run at 40 or 42, 43. And we might bounce around a little bit and then make a run at 50. Good growth numbers. Look at next year's, estimated earnings. So, this little run right here, that was nice. If you took this at 31, 32, you took it to 40. That was a nice move. Even this breakout right here in the 30s, kind of went there around and boom, took off. So maybe kind of a little pullback. Nice little cup here. Tight flag went up and we come down a little bit. Have a nice little cup here and take off. HCC. DVN. DVN 6331. 6331. Take out this little shelf right here. Again, same constructive pattern here. It's got earnings in 23 days, so I'm going to make a little run. It's holding the 21, holding the writing 50 up. Kind of broke out a little bit here. Now kind of consolidated. Now it's building a nice little tight shelf. If it breaks this little shelf, we might make a run to 70, 75. Top industry group, great estimates, almost double from this year coming up. DVN. OAS 150.05. 150.05. Again, nice little shelf here. I'm not gonna wait till like 55, 58 because we might just take profits. If we get the 150.05 break, we might go back to 155. Take a nice little 5-point move. I'm taking at least 50% profit on that. So it's holding the 50 real nice. Okay, so that could be your stop. I'd be like a 148. And if you do break 158, we could easily go and see 160, 165, and then maybe come back a little bit, take some profits, and eventually, a little bit longer term, if you break 155, 160, 170, I'll run to 200. Again, long term, but like the numbers, nice growth. Look at this. I mean, this is ridiculous estimated growth for the next couple of years. So 2021, somewhere around here, look at that earnings I had. It went from 108 to 130 in the end of last year, and even for even the beginning of the year in the 40s. Once you broke here, let's say at 50, he took it to 100. It doubled because that was the earnings growth. So in 2021, kind of has meandered a little bit because it's going kind of sideways because the earnings growth kind of decreased. But look for 2022, back to the 2020 level. So if we break right here, it's gonna easily see 200 by mid next year or early next year or even late this year. Again, I'm projecting from what I'm seeing here, but I don't see why not. The potential is there. So they paid a special dividend here. So let me see what the yield is. 1.6, nothing crazy, but it still pays a nice little yield. So I mean, look at this growth here. I mean, this would have been a perfect little base breakout right here. Boom, you buy it at 100, and you got a 50-point move in about 5 months or so. So again, I like this one. OAS. And then last one, ACC. ACC 57.91, 57.91, right here. Break out this little shelf right here. I like this little base, and then nice little tight high handle. If we break this, we could see a potential for 70.75. Decent growth, nothing crazy, but again, estimates are consistently growing. It's a REIT, so it's not gonna be a 3 or 4 400-point return in a year, but it's still top 50 group. Is there a yield? Yeah, they pay 3.3%. That's not bad. So if you run the wheel on this, you could generate some profits the other way. Again, I'll go through more detail on the wheel strategy. I like it. It paid off really good for me in 2020. Last year, I kind of stayed away from it a little bit. I tried other growth strategies, and the market was kind of choppy, and I kind of started going back to it this year, and it's been paying off really well. I fine-tuned a few things. So again, I'm going to go over my wheel trading system in a special video. I created a flow chart, and I'll go through some real life examples. How you can kind of add another tool to your toolbox when the market is not doing this. That you take a breakout and it works. You have this chop fest right here in the market, which is hello, right here. This is what we've had. Let me go to the daily. We've had this kind of crap. We're still making good money by selling premium, and then if things go bad, we run the wheel. Okay, so again, study the charts. I'm sending you the scan watch list. It's got these that I sent you here, plus many others. I go through more in depth my current positions. Just real quick, I'm gonna just go through a couple. For example, I have Nvidia. I have the 230. Nvidia had the 230. I think it's right here. Short put. Again, yeah, I'm taking a little hit, but I'm still above it. There's a little gap to be filled here. I received about 588, 575 around there premium on that. So my real cost is 225. So I'm still above break even technically. So I'm okay on that one. Zim is one that I have a good position on. I like Zim long term, and I'm running the wheel on Zim. Again, I was hoping the 60 will hold, the 50 will hold. It did not. But my cost base, my basis on this, I had the 60 short puts, and I received about, I think it's like 375 premium on that. So in reality, I have like a 56.5, 57.5 around there cost basis. So I'm right at break even on this huge downturn from like 75 to let's say 55. That's almost a 20-point move, and I'm still at break even. So it did not hold the 50 like I wanted it to, but hey, it still has growth. And then the main reason why, again, this dropped so much is because they had a $17 dividend payment. I mean, 33% yield, which is just on an anomaly, obviously. They had a $17 dividend, so the stock has to be adjusted, the price. So it dropped about 20 points from there. So again, it was priced in. It wasn't like the stock is now like not working and it had this huge sell-off. The sell-off, it wasn't really a sell-off. It was more of a reduction in its price due to shareholders receiving $17 a share. So it went from 80 to 60 because they got paid that difference. So now that's why this dropped. So again, that's why I'm not really that concerned with it. It's got nice growth. It's got great numbers for the next for this year and for next year. Yeah, it drops a lot in 2023, but the yield will then increase a lot more. So again, I'm comfortable with this. I'm at break even right now. So that's one. Another one that's working pretty good here is AMR. AMR, I had the 95. I'm right here. This has gone up, thank God, steadily for the last few days. So I'm about 45-50% profitable on this one. On the short puts. Oxy, another one that I have. I think I'm down here somewhere in the 50 range. So this was very profitable. I'm already up 55% on that one. SM, it's another one that I have. That one again, I think I'm down here at 35 or something like that. So that's been holding up pretty well. That's profitable. I have a few other ones that are working really good, but I want to go over the ones that are not working, which I told you. NVIDIA, I have a break even. SMH, I have the 235. So I'm like, let's say right here. I'm right here. I mean, this is like, again, growth stocks. Why? This is down because it's growth stocks, semiconductors, and the interest rates are going higher. So this is not working. But again, I had the 235, and I think I received like a 450. I think I have an average price of 450 credit on my 10 contracts. So in essence, let's say I have the 230. It's a 246. This could drop 7 or 8 points in a day. That's fine, but I'm saying like I'm still good. I had the 230 for May. So and it's an ETF. It's not going to go to zero. So I can continue to roll this, generate more premium, and if we have a nice little rally in 3 or 4 days of rallies, then these are going to be very, very profitable. Roll them and so forth. Again, it's a strategy. Another thing also on bear markets, when you have downtrends, when you have basically a bear market, which is, we've been in a bear market since November. We have our highest high was here in November. So technically, this is a downtrend from this point. So this has been a bear market. The biggest rallies that you get in the market are within a bear market. So when you have a sustained uptrend like this, you don't have like huge up days. You have nice little, it's a sustained uptrend. So you go up gradually. What happens when you're now in a bear market? You have these huge rallies. Bear market, you have huge rallies and you consolidate. You go down and you have this huge, same thing here. Because these are huge moves. These are huge moves. Okay, so these moves right here make a lot of money. Make a lot of money in those moves. Because yeah, you go through a drawdown, so your account value goes down because you are in a drawdown, but since you're selling premium and volatility gets expanded, your premium is high. So when you have these huge rallies here in 3 or 4 days, volatility just gets crushed. So since it gets crushed, your premiums get reduced, and you sold something at 4, now it's worth 2.5 because the premium got reduced because of the volatility crush. The VIX goes down. You have a 25 VIX and it goes to 18. This goes from 4 to 2.5. That's you make money right there. And then you have obviously a sustained up move. Now this just on volatility, you go from 4 to 50, and just in the move, you go from 250 to 150. Using that 3 point move, you have 10 contracts. That's $3,000 you can make. And yeah, you were down like, let's say you were down like 5 here on a drawdown, but then this drawdown gets replaced, and then now you no longer have a drawdown. Now you're positive $3,000, so you have like an $8,000 move here. I'm just hypothetically talking about if you have 10 contracts, okay, on this scenario that I'm referring to here. So now you have realized gains of 3,000. Yeah, you have to sustain through this, but again, it's a strategy, because you're selling much lower than technically you see it going to, so that when you do get that bounce, you're able to get out and generate profits. And I just basically watch, rinse, repeat, watch, rinse, repeat. You do it over and over and over again. And what do I mean? You start selling here, you might be a little bit early. I'm gonna draw down. Boom, you get a rally, you get out, you close out, you're profitable. You start doing it again. I'm a little bit early, you're in a drawdown. Boom, woof, you get out, you're profitable. Now, I'm doing it again. I'm a little early, I have a drawdown, I can sustain a little bit more, and there will be a rally. I mean, it might not be something like this, but all I really need is a couple days, and then what I'm in right now, which is the Nvidias and the SMHs and all that stuff. This right here will have a little rally. I don't have to go to 300. I could just go to like 245, 230. I mean, it's not a 10-point move. Nvidia can move 10, 15 points in a day. So even within a day, it doesn't have to close 10 points higher. Sometimes it goes like 15 and then it closes at 7 high. But in this 15 here, let's say I catch it at 12 up, I can close out my positions and generate that profit. So again, it's a strategy. I go through it in detail, but it has proven to be very profitable. The downside is, yeah, you have sustained drawdowns, but like I had with my SQ position, I had a sustained drawdown for about a month, and then I was able to work my way out of it. Again, back to what I was saying, it's a 123. I had the 150. I could have held it a little bit longer, and then these would have been extremely profitable. Again, hindsight 2020. You're never gonna catch the high, but what I'm saying, even my original transaction, which is the 135, we're at 123. So even if I would have done nothing, I would have been over, underwater to the 140 something here on the 135, 10 points. But now I'm 10 points higher. That 135, I'm profitable on that, even if I would have done anything. So again, when you sell premium, time it's your biggest component of the trade. Obviously, price movement has a lot to do with it and volatility, but time, it's a huge 50% component of it, because option is a decaying asset. In other words, as time passes, that premium on the option gets reduced because they have an expiration date. They have a shelf life. They will expire. They don't go on forever, just like shares. They will expire. So the closer to expiration, the more the premium gets reduced. And if you have a nice little, 3 or 4 days of down movement, if you have a short call, then you can cash in. The same thing here. If you're selling here, and let's say you're selling here and you did it here, and now you have this move here, this premium goes higher, you have a drawdown, but then as it gets closer to expiration, let's say you're here, it gets closer, and then you have this move, even a couple days, now this becomes very profitable, you close it out, and you make a profit. So again, time is a big component of selling premium. And why am I doing so heavily on selling premium? Because we do not have this. Okay, I keep repeating it over and over. We do not have this yet. Maybe in May we'll get it from, have a nice little summer rally, and then back in September we have a nice little downtrend, and then we have a nice little continuation of the pattern October through the end of the year. Who knows? We'll treat it as we see it. But when you sell options, you have options. Okay? Have a blessed weekend. I'll talk to you guys on Tuesday in the next video.